Welcome to Unfiltered and Unstoppable with Romesburg. Real strategies for real advisors, a podcast that dives into what it takes to scale a thriving financial practice. Each week, we'll discuss actionable strategies, tools, and insights to keep you ahead in today's financial landscape. From innovative products and powerful marketing tactics, you'll get unfiltered truth and unstoppable strategies. Let's get started by building your unstoppable financial practice today.
Most advisors think that an RMD meeting is just simply taking money out of an IRA, which I think is one of the biggest missed opportunities in retirement planning. So if you just think about it for a moment. Your client has spent 30, 40 years saving for retirement. They've worked thousands of days, made an innumerable amount of sacrifices, raised a family, built a business, accumulated wealth all of those years. And now we are finally at the stage of retirement. We've made it, right? And the conversation that many advisors choose to have at that point in time is, well, Brian, looks like your RMD this year is $48,362. How much tax should we withhold? Now, don't get me wrong, the distribution clearly has to happen, right? The tax withholding matters. The paperwork has to be accurate, and this is a great responsibility of yours. But if this is where the conversation begins and ends, we have missed a wonderful opportunity. So, for those of you that this is your first time, welcome to Unfiltered and Unstoppable. This is where we help financial advisors build better businesses, create remarkable client experiences, and ultimately become the advisor that families never want to replace. I'm Rob Romesburg, and today I really want to challenge the way you think about RMDs, because the RMD, I don't believe that's the meeting, right? I believe that's why the meeting exists, but there are two totally different perspectives here. One creates paperwork. The other perspective creates planning. And that's where exceptional advisors really separate themselves. And that's what I want to help you do today. Let's talk about a different way to think about RMDs. This is something that I have noticed after coaching advisors all across the country. That the advisors that consistently grow don't necessarily know more tax law than everyone else. They don't have some sort of secret investment strategies, and they're most certainly not more passionate about IRS distribution tables, right? But what they do differently is this: they use every single client interaction as an opportunity to deepen the relationship. An RMD meeting isn't about satisfying the IRS. It's about helping a retired family answer bigger questions. Are we still on track? Are we paying more taxes than we need to? Has anything changed in our family? Is our income plan still working? If something happened tomorrow, would everything be in order? These are the conversations that clients remember. Nobody's going home and telling their spouse, man, that distribution form that Frank had was incredible, right? But they will absolutely say, you know what? Frank asked me questions that I hadn't even thought about. I am so glad we had that meeting today. This is the difference that we are going to create today. We're going to have so many phenomenal questions for you to be able to use for each and every single meeting, not just your RMD meetings, but for every meeting. So one of the questions that I believe that has changed everything, and I'm going to give you a real example here. One of our advisors was meeting with a retired couple, and it could have been just a generic RMD review, right? Reviewed the account, calculated the distribution. Everything looks straightforward. Everything's fine. However, instead of just going and getting the distribution form and having Susie come in and get them out of the office, we got the RMD done. The advisor asked one question. So once we get this RMD check cut, once you receive it, what are you going to do with it? What are you planning to do with this money once it reaches your checking account? Just stopped. Husband laughed and he said, honestly, probably nothing. And guess what? That answer changed the entire meeting because obviously they didn't need the income. That's why it's called a required minimum distribution. If they needed it, they would take it out, but they're being forced to take it out, right? But we want to make sure that we find opportunities to make those dollars work someplace else, right? Would charitable giving make sense? Is there some sort of tax planning opportunity here? Maybe let's start looking at gifting opportunities to their grandchildren. I mean, if you've got a couple that the grandchildren is just the apple of their eye, and you start taking these RMDs and looking at gifting opportunities to the grandchildren, they're going to say, "Wow, I didn't even know this was an opportunity. Thank you so much." That's how referrals happen, by the way. And during that discussion, that couple just casually started to mention, "Oh my gosh, you know what? Actually, we have another investment account that we never told you about." And so they were a little guilty about it. And then guess what? All of a sudden, that advisor started to manage an additional 900,000 because he brought over some additional ideas that those particular clients weren't aware of. And the opportunity wasn't uncovered because the advisor knew RMD rules, so to speak. It was uncovered because he asked better questions. So that's the theme of today's episode. The advisor who asks better questions build better businesses. So let's talk about the three levels of an RMD meeting. And as I was preparing for today's episode, I realized that there are really three types of advisors out there. So level one is that transaction processor. And we've all been there, right? The meeting lasts 15 minutes, the paperwork gets signed, everyone leaves, mission accomplished. We could check that box, except nothing actually changed there. And then we have level two, the financial planner. This is the advisor that reviews the income, talks about taxes, looks at the investments, updates the plan. You know what? That's a valuable meeting, 100%. But there is one more level here, and this is what I like to call the family advisor. The family advisor absolutely understands that retirement planning, it's no longer about accumulation. It's about helping families make wise decisions during one of the most important seasons of their entire lives. That family advisor is asking questions to both spouses. They're asking questions about their adult children. They're getting deeper into their health care. They have a clear understanding if they're charitable. What are their charitable goals? What is their purpose in retirement? What type of legacy do they want to leave? And these, by the way, these are not easy conversations. They're not for the faint of heart at all. And the reason why they're not easy is because they're important conversations. I, know that seems odd, but guess what? You are the advisor that the client remembers with these types of conversations. And frankly, this is the advisor that is the one that is receiving 80 referrals a year. So here's something we're thinking about. I know this is going to be shocking to you, but your client didn't wake up this morning just super pumped and, gosh, I can't wait to get that RMD appointment scheduled. They scheduled the meeting because they had to, right? It's important. They have to. And they're not really coming up to really discuss distributions. What they do want to discuss is reassurance, meaning they're wondering, Am I still okay? Am I making good decisions? Is there anything else that I should be doing differently?" And the RMD just simply creates the appointment. Your job throughout that meeting is to create the value. And that's the biggest mindset shift that you can make. If someone called your office tomorrow and they said something along the lines of, "Hey, you know what, Frank? Don't worry about it. I've already taken my RMD for the year." What would you do at that point in time? Would you say, "Oh, awesome, great. I'm glad we got that taken care of," or would you still schedule the meeting? Would the meeting still be worth having? It better be. It should be. And you should not be only scheduling meetings to process paperwork, right? It- because sooner than later, very soon actually, technology is going to eventually replace part of that process. But guess what? Technology is never going to replace wisdom. It's never going to replace thoughtful conversations and and thoughtful questions. It's never going to replace helping that retired couple make difficult decisions together. This is where you become indispensable. There's been a fear out there, whether you want to admit it or not, that AI is going to replace us. Listen, I promise you, it could replace, it will replace parts of the process, but never will it replace the human being. And so let me give you an awesome framework that will completely change the way your reviews, specifically your retirement reviews, the way they feel. Not to make it more complicated, we're going to make it repeatable. Every RMD meeting should have 5 conversations, not 5 products, not 5 reports, 5 conversations. That first conversation is all about income. Don't ask, "Hey, Jim and Mary, where should we send your distribution?" That's so generic. Instead, the question needs to be, "Hey, what role will this income actually play in your retirement?" Meaning, like, what does it solve? What will it provide you? What will you do with it? That's such a better question. And you know what? That they're I'm certain you have clients out there that will need every dollar of that. Others don't spend any of it. Some immediately reinvest it. Some are just letting it hang out and checking. So every answer that they give you with that question gives you something else about their retirement plan. The second conversation is all about taxes. Not how much should we withhold. That's not a conversation about taxes. Instead, how do you think that taxes are actually going to impact your retirement over the next 10 years? Impact. That's a heavy word. That's a solid word. That's a word that makes them think. That's a word that makes them sit back and go, "You know what? I'm not really sure." And then all of a sudden now we start talking about Roth strategies and IRMA, widows tax brackets, back to the charitable giving, right? And then we get into that future planning. And this is where you, the advisor, creates the real value. The third conversation is purpose. You notice I haven't said investments, right? I said purpose because once the money leaves that IRA, It still has a job to do of some sort. So you're going to ask a question here of, what do you want these dollars to accomplish for you now? It's a planning conversation, not an investment conversation. This changes everything. Now the biggest mistake that I see that I've seen, and unfortunately, this is where many advisors sell themselves short. You're allowing the IRS to determine the agenda. So the IRS says you must take this required minimum distribution. Yes, understand that. Let's do that. But don't allow the meeting to be entirely about the distribution. Look at it differently. The IRS simply gave you a reason to schedule this meeting. You actually decide what happens during that meeting. This is where your value lives. That not in calculating the distribution, but leading the conversation. Because every client is going to eventually ask the question that has nothing to do with RMDs. They're going to be asking you questions about healthcare, about aging parents, about helping grandchildren, about, how do I leave these assets efficiently? Questions about purpose. And the advisor that creates that space for these conversations, you are so hard to replace. And that's exactly where we're going to go here next. Because these next two conversations about family and legacy, this is where you will create the deepest relationship and uncover some of the greatest and wonderful planning opportunities. And so that fourth conversation, it's not about money at all. It's all about family. Because almost every single retirement plan out there becomes a family plan. Now, obviously, exceptions for those folks that don't have family or whatever reason don't want to leave anything to the family. A lot of that, but at some point, one of the spouses passes away. Then the adult children get involved. Grandchildren enter the picture. Healthcare changes. You'll start to see the actual implementation of estate planning, and fortunately or unfortunately, family dynamics start to shift. So the question at this point in time, will you already know the family at that point? Or will you be meeting them for the first time during one of the hardest stages of their life? That's a question that every single one of you should wrestle with. And one of my favorite questions during a retirement review is incredibly simple. Has anything changed in your family since we last met? Once again, stop talking. At that point in time, your client is going to tell you exactly what matters to them. Exactly what matters to them. Maybe a daughter got married. Maybe their son started a business. Maybe they just became a grandparent. Maybe a spouse just received a difficult diagnosis. Or maybe they're helping aging parents. And guess what? None of those topics show up on the review. None of them show up on the account statement. But you know what? Every single one of those questions can absolutely change the entire scope of the financial plan. And that's why the best advisors out there review lives before they review the portfolio. And that fifth conversation is about legacy. And I think lots of times we can make this more complicated than it actually is. And most of those legacy discussions start with the documents, right? Wills, and trusts, and beneficiary forms, power of attorneys. Once again, those are all vital. Those are all important. But that's not where you should start. You should start with a question like, what do you hope that your money accomplishes for your family after you're gone? That's a question. That's a question that goes right to their heart and soul. Think about that difference. It's not a disgusting legal question. It's a life question, right? Nobody's saying, you know what, I hope Jimmy and Susie remember my IRA. They remember value, they remember generosity, family traditions, education, opportunities, experiences. The money part of it is simply the tool to be able to provide all of that. Pur- Purpose is the real destination here. When your clients start to talk about purpose, your planning becomes much, much deeper. Well, one of the things that I've noticed over the years is that clients are incredibly good at asking tactical questions. How much is my RMD? How much tax should I withhold? Can I take it monthly instead of annually? And you know what? Those are good questions, but they're not the important questions. You, as the advisor, your job is to ask the questions that your clients don't even realize they should be asking. The questions like, you know what, Jim and Susie, what happens if one of you passes away first? Would the other one know exactly what to do? Is that important to you for the other one to know exactly what to do? Would you ever be interested in ever having any of your children sit in on these meetings? And one of the things that we need to pay attention to is, are we minimizing taxes now, but possibly creating a much bigger tax problem 10 years from now? And then one of my final questions here is, if your health changed unexpectedly, what what do you think? What parts of your retirement plan would need to change immediately? That we're not talking about creating fear here. We're talking about creating preparation, because we don't want to be reacting as part of the plan. We're planning as part of the plan. So if I had to choose one of my favorite questions, it's the question of, what decision have you been putting off? So I want you to think about what that would uncover. That could talk about updating an estate plan, helping a child financially, selling a property, downsizing, uh, talking to a family member, planning for long-term care. Clients usually don't know what they should do, meaning they just simply haven't done it yet. So you don't have to be the great advisor doesn't have to always provide new answers. You just sometimes have to create enough accountability for the clients to move forward, right? That's incredibly valuable. The fact that you can be their accountability partner. And the things that I don't like to see as well is that, and it costs advisors a tremendous opportunity, is that when you treat an RMD like a December project, because October's here, November's nuts, and then, oh my gosh, December's here, and all of a sudden it's paperwork season. Everybody's rushing to get to the deadline. Instead, imagine if every single one of your RMD clients had their planning meeting late in the summer. So August, September, maybe early October. Now we have time to think, right? Now we have time to actually coordinate with their CPA. Now we have time to involve their estate planning attorney. Now we have the space to be able to really discuss and implement Roth conversions. Let's make thoughtful decisions here instead of rushed decisions. And then the distribution actually becomes the easiest part of the process. And the planning always comes first and paperwork comes last. That's exactly how it should work. Um, I remember several years ago, I was talking with an advisor who had some of the highest client retention that I'd ever seen. I asked him, what do you think makes your annual reviews different? And his answer was actually pretty surprising. He said, I stopped beginning my meetings with performance. Instead, He made sure that every single one of his annual reviews began the same exact way. He just simply smiles and asks, "So tell me, what's changed since we last sat down?" That's it. No agenda. We don't dive right into the reports and the charts. Just that one question. And what he told me was actually very fascinating. He said, clients never start out, they never answer talking about their investments. Immediately start talking about their life, their health, where they traveled, where they're volunteering, their church, obviously grandchildren if they have them. And then once they finish, then he finds a way to build that financial discussion around everything that they just shared. That's taking their values into account. Just brilliant. And the thing is, your clients don't live inside their investment accounts. They are real people. They have real lives, and your planning absolutely needs to reflect that. And a philosophy that's really become a part of how I think about retirement planning is that retirement's not an investment phase, right? It's a decision phase because every year they've got to make decisions. When to claim that Social Security? Are we going to move? Should I help my family? Can I spend more? Should I spend more? Are we able to travel? Uh, do I want to leave a legacy? And the investments support those decisions, but they don't replace them. And that's why retirement reviews need to be much more conversational than analytical. Because conversations really uncover decisions, and then those decisions create the planning opportunities. So I'd love for each of you to do this before your next retirement review. Take a look at your current meeting agenda. Think about every question. Now ask yourself with these questions, with these questions. Does this question help me understand my client's accounts or my client's life? Because both matter. But if your agenda is primarily about account questions, you're missing opportunities that no performance report is ever going to reveal. And that brings us to the final piece of our episode here today. I'm going to share with you 7 of my favorite questions that I believe every advisor should be asking through every annual review. And if you consistently ask these 7 questions, you're going to have better conversations. You're going to uncover significantly more planning opportunities. You're going to be able to definitely strengthen your client relationships and ultimately, overall, build a much better advisory firm. And we've been talking about these better questions. You don't have to ask them in this exact order. It definitely don't read them word for word, but let's use them as a framework, right? Let's use them as a part of your system. So we said this earlier. How has your retirement changed since we last met? That this will immediately change from accounts to life. And right now, you're going to learn more in the first 5 minutes than you would by reviewing statements for 30 minutes. The second question is, what role does this income play in your retirement today? So that brings us to the purpose, not mechanics. And you're going to find out immediately whether they need the income or they don't, how they're spending it, are they accumulating it? But every answer there is going to tell you something. The next question is, what Jim and Barbara, what financial concern keeps you awake every night that probably wasn't on your mind 5 years ago? Because guess what? Retirement changes people. All of a sudden, their concerns are different. They maybe even evolve. Therefore, your planning should evolve as well. Question number 4: has anything happened in your family or changed in your family that we should be planning around? This question right here is going to uncover all of the planning opportunities, more than any sort of investment review will ever uncover. Because guess what? Families are constantly changing. This is why your plan, your financial plan you put together for your client, should change as well. This question number 5: what decisions have you been putting off? This is probably my favorite question because every single one of your clients has a decision they've been putting off, and this is not about making another recommendation. They just are looking possibly for permission to finally make that decision. And question number 6: what do you hope your money accomplishes for your family? This isn't about who gets what. This is not about dividing up the pie. This is about the purpose. So purpose first, then that will lead us to the strategy second. And then finally, the question number 7: is there anything that we haven't talked about that we should? Do not underestimate this question because I'm telling you right now, there are so many opportunities that will come up from this question that was not on your agenda. This is going to give your clients permission to bring it up, and you'll be surprised at what the answers that will be that they'll provide you from that question. And I was I'll give you one final story here. I was working with an advisor who told me that all of his retirement reviews felt the same. The portfolio, the performance, the statements, all of that stuff. And he said, "Hey, man, Rob, these are good meetings. I could just tell they're not memorable." And so I was like, "Awesome. Let's change one thing, and not the technology, not the reports, the question." And he asked the question of, "Tell me what's changed in your life since we last sat down." And then, man, tears, heartbreak, and it was a really tough meeting, but one that was needed. The client immediately shared that his wife had been recently diagnosed with early stage Alzheimer's. Everything changed, right? That's a meeting. Then all of a sudden, who cares about the investment allocation, right? That's not our most important decision right now. Now we're talking about healthcare planning. Now we've got to get powers of attorney. What's the life insurance look like? Is our long-term care established? What has the communication been like with the family at this point in time? And you know what? We better update those beneficiaries. Do I need to get involved and prepare the adult children? And when he called me, he said something that I'll never forget. Rob, that was the most important client meeting that I've had in 15 years. And not because he knew more, right? But just simply because he was listening better. That's what it's about. We want to be better listeners, especially in this profession. Uh, the best planning is never with an answer; it's always with a question. And annual reviews. I love the idea of having themes with your annual reviews. So meaning like one year your theme could be about income, the next year is about tax efficiencies, legacy, healthcare planning, family communications, because you don't want your clients to feel like they're attending the same review every year. So making them excited about, hey, what's the family communication going to look like this year? Because we're building that retirement strategy over time. I'd like for you to imagine telling your clients this year, I'd really like us to focus on making sure that your retirement income continues supporting the lifestyle that you've worked so hard to build. Or, you know what, this year I'd really like for us to focus on almost entirely on reducing unnecessary taxation over the next decade. Now we're talking about different things outside of allocations. Let's create that anticipation. Let's create that depth, right? And especially for those long-term clients, we want to keep them engaged instead of like every annual review is just another update meeting. One of the things that I want you to do is a Monday morning challenge. So pull up your appointments, your next 5 appointments, actually. And I'm not talking about redesigning your whole entire process. I'm not saying that. No, not creating new presentations or buying new software. Just write this question at the beginning, at the top of your meeting notes to make sure you start out with this question. And that question is, how has your retirement changed since we last met? Be sure to ask that question. Stop talking. Lean into it. Listen. Take detailed notes. Let's see where the conversation goes. I'm telling you right now, you are going to discover more opportunities that never would have happened. I want to hear what happened. So today's episode challenged you to rethink your retirement review process. We've created a resource to be able to help you implement it immediately. It's simply called our retirement strategy review. You can reach out to us at our website, which is simply evolvewithgradient.com/ignite team. Once again, evolvewithgradient.com/ignite team. And inside that, you are going to see what we call the the annual retirement strategy framework. So we're going to have a very consistent high value process. The 7 questions that we talked about, but also a worksheet that goes along with that. And then finally, a retirement planning scorecard. This is an awesome tool to make sure not only you, but your whole entire team delivers exceptional client experiences every single time. So request it, download it, customize it, use it with your team. And most importantly, use it to create better conversations. And I'll leave you with one final thought here. Obviously, every advisor can calculate an RMD. That's expected. But the advisor who becomes truly indispensable, that advisor does something different. They are going to use that RMD to start conversations about retirement, about family, about taxes, about legacy, and ultimately about life. Because that's where trust is built. That's where planning becomes meaningful. And ultimately, that's where these great advisory firms are built. If you enjoyed today's episode, I'd appreciate it if you followed the podcast so you don't miss future episodes. If you found value in today's conversation, share it with another advisor or with your entire firm. Great ideas become even more valuable when your entire team puts it into practice. And finally, thank you. Thank you for investing in yourself. Thank you for continuing to sharpen your craft. And most importantly, thank you for serving the families in your communities who trust you with the biggest financial decisions of their lives. So until next time, keep building better systems, keep leading better conversations, and keep helping families retire with confidence. I'm Rob Romesburg. This has been another episode of Unfiltered and Unstoppable, real strategies for real advisors. As always, thank you for what you do.
The opinions herein may be from personal experience and may not necessarily be those of the Gradient Financial Group, its employees, or affiliates. Any results, topics, or outcomes are for informational purposes only. Financial professional use only. Rob Romesburg does not render tax, legal, or accounting advice and is not affiliated with or endorsed by the Social Security Administration or any government agency.